What's up, strangers? Welcome to the Wealth Game Nation. My name is Vedo, and I'm here to help you better understand the wealth game and become part of the Wealth Game Nation. In today's video, I will talk about how to pick great stocks, or as Warren Buffett calls them, wonderful businesses. So let's get right into it. First, we will talk about what can go wrong if one does not pick wonderful businesses. What are the characteristics of wonderful businesses? What is the needed knowledge in order to identify wonderful businesses? And my thoughts. What can go wrong? Anything that can go wrong will go wrong. This is a statement made by Edward Murphy. He was an aerospace engineer working on a fail-safe mechanism. Basically, he was saying that if you attempt something enough times, then eventually all possible outcomes will happen. For example, if you would think in terms of something simple like rolling a dice, you take the dice has 6 numbers on it, and if you roll the dice enough times, eventually you will hit all 6 numbers. I like to think the same thing about investing, and people who do not know how to invest, eventually they will go wrong. Even if they're at the beginning, it's a bull market and everybody is making money and so on, and they think they know what they're doing, eventually when it comes down to skill, then it will go wrong. This is because bad investments, there are everywhere. Investing has become synonymous with gambling. You can see everywhere ads. You can see everywhere your famous actors, your famous influencers trying to advertise something. It's just easy. You go there, click here, couple of clicks, and then you can be, a trader or whatever. There, people that invest and then they lose money. And I think this is a smaller problem. However, what a bigger problem is when people invest and then lose money and then stop investing altogether. So what is the solution here? The solution here is to learn how to invest. You can learn how to invest by educating yourself and also by following this channel, subscribing, and come along for the journey. Next, what are characteristics of wonderful businesses? Strong brand value, moat or competitive advantage, and pricing power. So if you think of big, strong companies, such as, for example, Coca-Cola or McDonald's, they have a great competitive advantage, they have a great moat, they have also pricing power. So if you think about if somebody wants to go buy a Coca-Cola or burger at McDonald's, they will not stop and be like, the burger is now $2.20 and it was $1.90. I'm not gonna buy myself a burger. Same thing goes for Coke. Next is stable and predictable revenue. The company is not impacted too much by other economic factors such as recession, inflation, world conflicts, etc. Next one is low debt. Company is using own profits for organic growth. Example, debt to equity ratios. High free cash flow. Free cash flow is the cash produced by company through its operations minus the cost of capital expenditures or CapEx. Next one is return to shareholders. Those companies usually pay healthy dividends. They have a long track record of raising dividends every year and do share buybacks. So healthy dividends is something around 4%. A long track record can be easily found out if they have a long track record or not of raising dividends. And share buybacks, you can see this in their financial statements, whether they are diluting or buying back shares. Lastly, I have it here as optional, is strong leadership. This does not have to mean, but it also helps. If you think of Elon Musk, he is in the media all the time. He's eccentric. Even though they have a great product, I think he's also partly responsible because he's out there. Same thing goes for Warren Buffett of Berkshire Hathaway or Bill Gates of Microsoft. What is the needed knowledge? Needed knowledge for this is you will need to do your own research. If you like the store, chances are you love the stock. This is a quote by my favorite comedian/investor Peter Lynch. Basically, he's saying that if you see a product from a certain company is being used, then it's very likely that the company is doing very good business. You will need to learn how to read financial statements. There are 3 major financial statements. One of them is the income statement. The income statement is the overview of revenues, expenses, net income, and earnings per share for a certain period of time. Second one is the balance sheet. The balance sheet is a snapshot of all assets, liabilities, and shareholder equity at the moment of reporting. And then you have cash flow statements. Cash flow statements shows how companies' operations are running, where does the money come from, where does it go? Are they doing cash buybacks? Are they doing investing in their plants and equipment? Are they diluting? Are they paying debt? Are they raising debt? And so on. So you will also need to calculate free cash flow. The free cash flow is when you take the operating cash flow and subtract all capital expenditures. Then also you can calculate from there what is the free cash flow yield, and then it can be compared to, for example, a 10-year treasury bond. So it needs to be, the free cash flow yield needs to be bigger than a 10-year treasury bond in order to account for risk that the investor is taking versus a risk-free asset like a 10-year treasury bond. Also, it will take some time to learn how to read those statements, but in the meantime, you can try some free tools, for example, Yahoo Finance or Google Finance, and you go to the financials tab. Many of these income statements probably very simplified, but also adds the previous history, which is also useful to see. Now, let's get into my thoughts. If you want to be successful in the stock market, you will need to master your emotions. The most important organ in your body as far as the stock market is concerned is the guts, not the head. This is also a quote by Peter Lynch, basically saying that you will need basic math knowledge, but you will need to have a stomach for the volatility that the stock market brings in the short term. Also, I like to say that if numbers would be all that matters, then mathematicians would be the richest people in the world. This is certainly not the case. You will need to educate yourself. You need to educate yourself by doing your own research. Follow the characteristics of wonderful businesses as I have illustrated. Information is available instantly and for everybody. Financial statements of each company are available right away as soon as they file them with the SEC. You need to keep a long-term outlook. You need to dollar cost average. You need to avoid hype. Again, do not listen to the ads. Do not listen to your favorite actors. Do not listen to your favorite influencers, because they are people who are paid to get this message out there, and they don't care if the product they're saying is good or bad, if the stock or whatever is going to go up and down. They don't care about this. Also, don't leverage. Trading does not work. Trading is to 80% people lose money. That's basically broad stroke everybody. Don't try to time the stock market. Nobody can time the stock market. Don't short. There are people who are trying to short the market. Everything is now pointing that it's going to go down. People might try to short the market. It's a recipe for long-term disaster. Maybe it works in the short term, but it's not going to do long-term any good. And don't invest more than you can afford. Diversify, but don't diversify. This is a term coined also by Peter Lynch, where he says that above a certain number of assets or stocks, the returns are not going to improve much. You should have somewhere a couple of stocks and up 20, maybe 25 stocks. And above that, it didn't make some sense to own anymore. You're just coming closer to the average. Lastly, stay the course. Do not change your investing criteria. Do not change your investing approach just because times are changing a little bit. Thank you very much for watching. I hope you enjoyed it. If you did, please make sure you share, like, subscribe. Also, what do you think about my list? Did I miss something out? Please leave me a comment, and I will see you in the next one. Bebo!